Just Patrick, just confirm you can see my charts, okay? All right, so you're telling me you've gotten in here. Okay. This whole range, go to the 4-hour chart. This whole drop down here is probably going to get retraced back up. Doesn't have to, but there's always a high probability that it will. It's bouncing on support at the moment. So I wouldn't have my trade at risk anymore because I'd say there's a high probability that price will probably come back up. Got a fib drawn from that high to low, the range of the day. It's already done the range of the day as well. So from the high to low, I've got the fib drawn. It's already done more than the projected range for the day. It'll probably come up 62 levels at 188.31 and then come down. So it doesn't have to, but I don't think I would have my trade not at break even in case it wants to come back up. Because if it's going to hold here and continue down, you don't want this to be retested. So it doesn't make any sense not to have you stop a break even and the risk out. And then you ask me about the pound New Zealand. I can find it. So you're saying pound New Zealand is trying to retest the breakout level around 208.40 based on the 1 hour time frame. So if you're saying so you're expecting this broken area here to be support. And if it succeeds, this is 29.757, the next resistance level on day time frame. So resistance on the day is at 29.64. You're saying 29.75. So you're saying this high here. I would be using this high here, which is 29.64 as a starting point. I'd use that one because the one that you're using is high, but it falls broke. And I would also look to the weekly chart, and there's some minor weekly highs here, which you quite clearly see on the day chart. So I would also look at 20900. I would say that whole area where price is in at the moment is resistance. So you got an area of resistance here, right where price is right now. So back to your 1 hour chart. Price has come into your resistance area, come down. It's having a natural bounce here. I would maybe say that this 1 hour chart's turned down in trends, is that this has a high chance at the moment of it's run up, it's changed trend to a down, it's failing at resistance at the 62 level to go that way, potentially, I would say. If you're looking to get long here, you're buying into resistance. All right, so that's my thoughts on the pound New Zealand. Back to the pound yen. 188.90. Well, if you want to have a stop still open on the trade, you'd have to have your stop above the high of the day. So the high of the day is at 188.90. So you need it slightly above there in case the high gets retested. But if you've gotten short at 88.20 here, you've already seen 70 pips. So in my mind, this is going to come up, you're better off taking profit and looking to reestablish another entry if price comes up. I wouldn't have that. I wouldn't have any risk on that trade now. If you got short there, I'd have the risk out and be deciding I'm going to hold it with my risk out, or I'm going to take profit and wait for price to come back up and look for another entry. It doesn't make any sense to be at risk. Oh, so you're not short at what the level I'm saying? You're short at 88.60. All right, so you're not in a very good position at all. You're short down here. You're just talking about that here as a test. Well, where did you say you had your initial stop? Well, I'm not sure where your initial stop is because I know where your entry is. It's 188.60, but where's your initial stop? Oh, hang on, I'm looking at the number. You're saying 188.60, so you got short. Sorry, you're short here. Well, if you're short there, I'd just have my trade at break even because you got a resistance area here at 188.28. I would be at break even, and either you're going to get stopped out. I wouldn't not be at break even. This has moved. So now that I've got your exact entry point in there, you've already seen 100 pips. There is no point having any risk on that trade now, in my mind, because if this came up to this level, it could just blow through that top, and then you have a losing trade. It doesn't make any sense. If it was my trade, I would have the risk out, and I'd just be waiting to see if it's going to continue down. Okay. All right, I'm going to get into my charts now. Go through the charts like normal. All right, so let's just start with the US dollar index. Now, trend is remaining up, and the big question has been this month, are we forming an inverse head and shoulder here? Just at the moment, just holding out an area of weekly resistance. This area here at 103.60, that's the area of contention for this to continue up. So at the moment, it's having a little bit of a hold there. Can this day chart remain in play? It's got higher bottoms to a higher top here. So really what we want to see is just a pullback and then a continuation up at the moment. So we should be looking for some form of, there's a bit of an area of support there. It's worth watching what price does there. Do we see a pullback for this to continue up? Now we've got, this forms, the dollar index is 50% of the euro dollar in terms of price structure, the makeup. So we've got the Eurozone interest rate decision on Thursday. So this may not do too much ahead of them because the makeup is 50% or more just from the euro. So this will be definitely driven by what happens on Thursday in general terms. All right, but the trend is holding here. We need to break a low before we can see a major reversal. So I'll just be watching price action to see if this is just still confirming that this can continue up for the long term. What we definitely have seen though is the S&P 500 has broken out. So this double top that was maybe forming, there was an entry on the inside day. The break of the inside candle gave you a good entry and you could have been risk-free. But of course, this is blown north. It's taken out the all-time high. So at the moment, whilst we're at very high prices, put in a higher bottom here on the weekly chart now to move above. And really, for anybody engaging on the S&P 500, they want to see this all-time high now hold as support. I wouldn't like trading at such high levels, but really 4816 is broken resistance. On any pullback, that needs to hold now for the buyers. If we can't hold 48.16 as support, we could be dealing with a reversal. So for those that want to engage on the S&P 500, the level to watch for a pullback is 48.16. That has to hold as supports. Do you see a setup to buy, to trade up off, to move further up? If we can't hold 48.16, then you're starting to look for a setup to trade down for a reversal. So you can monitor that, see what it wants to keep doing. So let's get into euro dollar. At the moment, this is just the total inverse look of the dollar index. 3 or 4 days, or 5 days almost, going next to nowhere. It's just on some day support here at 108.76 and 108.52. Trend though is down. Moved to a lower bottom. It's just coming back up. It's just actually maybe getting a bit of resistance from this particular trading day here. So what I'm doing at the moment, just monitoring. Ranges are relatively small. This is a range of last week on my 4-hour chart. It only did about 100 pips last week. So I like to monitor the range of the week before, because often it'll stop at the 62 to 79% retracement levels of the range. So we've been almost to the 62. It's starting to get deal down a little bit from this area here. But maybe this won't do too much ahead of Thursday. I really worry is at the moment. I'd be a lot happier if it could get up. The level I would like to be trading at is up here, the 79% level. Whether or not price can get up there is another matter. But at the moment, there's very little room from where it is now to where day support is. There's only 15 pips. So at the moment, there's not a lot of room to get short. If we are reversing here at the moment, it needs to come up. I wouldn't want to be selling into support. Day trend is down, but I wouldn't want to be selling into support. So I have to have an area that I'm happy with, and I'm not happy where price is at the moment, but I'd be happier if price was to move up within the range of last week. So just going to squash this in a bit. It's not really helping me much. The ranges are very small at the moment. It's not even worth getting off the 4-hour chart at the moment. I will just be watching here at the moment the euro. 109.40 is a 79% retracement of last week's range. All right, that's where I'll be looking for price to come back up inside the range of last week. There's a little bit of an imbalance in here where we drop below these 4-hour lows of support as well. So this would be my area to look to trade in or start to engage at if we could get up there. All right, euro yen. All right, I've been watching this level over the last 4 or 5 trading days, 4.5 trading days. I actually got short at 161.24 with a 100 pip stop. I actually got short this day and been weathering this. I'm looking at this long term as drop, rally, came up to 79% level or fraction shorts. And I'm looking for this to go like so. So I actually sold it at 161.24 with 100 pip stop. I've been in profit, out of profit a few times. Currently in profit. Hoping this is just now going to start to break down. We're having an outside data yesterday. Looking to hold for a long-term decline now. At the moment, we've done the range for the day, and I would anticipate, as I was discussing on the pound yen, that we've had a bit of a large drop. We've done the range for the day. Stops have been taken out on these 4-hour lows, so that creates price to drop quite aggressively. But I anticipate this to come back up in the natural form of a retracement. So on the 50-minute chart, we've already done the range for the day, or we've exceeded the range for the day in any event. I would look at this whole range and look to the 62-79% area for possible retest. You've got the daily resistance area at 160.124. That's this area here. That's where the last drop started. And that's where prices started to be gathering around and holding. So yen is getting stronger after the bodge today. And then as we've been moving from Asia to London, more of a reaction has occurred to the downside. So whether or not this can get up to 160.124, I don't know, but that would be the area. That zone 62 level to the 79% area would be the zone that I would watch if I wanted to get short. Well, I already got short up here already. All right, so that's the zone to watch. Don't be selling at the bottom of the day. I never sell at the bottom of the day. I always look to sell a rally if you can. Euro pound getting very close to major support here, so very difficult at the moment. Euro pound. You go to your weekly chart. You have weekly support over here, 85.47. More support down here at 85.18. In fact, this is from memory. It's going to my monthly chart. It's the monthly low down here, 85.47. Now we're in a downtrend on the weekly chart. We formed a lower top here, but we're clearly getting into support. This is not a great area to be a seller at. Yes, it's great if you've sold higher up and this just breaks down and through, but really you can't, well, I can't sell here because it's support. I can look for a buy opportunity if it holds. Let's say we get a day chart candle to the day chart now. If we get a day chart candle down here that shows a rejection, then maybe we're holding at support to move back up the range. But at the moment, countless times I was discussing up here at 86.09 to get short. Now we're getting very close to support. Now it's a question of will it break? If you're short, great, will it break? Other than that, you want to look down from 85.40.70 support at the moment. If we reject here, we could well be moving back up to 86.09. And there's a lower top, lower bottom there on the day chart. So at the moment, if you want to get short with the trend, it's just worth monitoring the day chart range. If it keeps moving down, drag the fib down and look for the next rally. All right, it's a patience game now. You need to sell a rally within the downtrend, nowhere near support. So that the potential is if you are short, then can price break through support and improve the profitability on your short position. Okay, so at the moment, I would be monitoring that range that's formed. 79% level is at 86.05, close to the 86.09 level. It's clear resistance. So just wait, see, can it rally back up? Can you keep trading short with the trend on a rally? All right, pound dollar. Pound's the strongest at the moment versus the US dollar, it would seem, general terms. Just coming up to a rally point though. There's some highs to the left here in the day chart. It's back to that 62 level of this large range. 127.19, it's close to. Just monitoring this range. We've actually hit the 79% level at 127.44. So this is a lower point to these two lows here. So are we coming up for a lower top to continue down? So that is the question. It's still forming high tops and bottoms here on the 4-hour chart, and it is very range bound. Supports here, resistance is up here at the top. So we've been so range bound, it could want to get up to the highs. So it wouldn't be a bad idea. Yes, you could trade if it retests the 79% level. You could put your stop above the high up here, with the anticipation then that this is going to move. It's moved down, comes up, down, stop above here. But with it being range bound, it could come into this zone, this area here, where all these 4-hour highs are. So the question of, will it retest the 7? If you're not already in, will it retest the 79% level and hold for you to get short, or do you want to wait for the higher level? So 2 levels to watch, 127.44, which has been tagged today, or more like very close to the 127, just maybe, I was thinking that was 127, I'm just reading it wrong. 127.71 is my resistance level. So around about the 127.70 level approximately. Up here would be the real high level. I don't think there's any real news coming out this week. I just want to recheck the news. There's the flash manufacturing service data coming out tomorrow, so that could drive it up to the very high area of the range. All right, so this is a little bit difficult, that pound at the moment. Is it topping out at the 79% level, or will it get to the higher level? So you could up to the 15-minute chart. Very tight entry. If that has topped there today, you can just drag a fib across this decline. Wherever it finishes, wait for a rally, and then look to the 79% level, wherever that is. So then you wait. You're playing the bounce. Playing the bounce there. You're anticipating that's the final top at the 79% level. Wherever it moves down to, draw your fib, look to the 79, stop above, sell at 79 for the move down. All right, so you can watch for a retest. Whether or not it will come is another thing. All right, pound yen, we have discussed before, but it's done its range for the day. It's worth looking at the day chart because it's really failing at the high of last year. Friday put in a very tiny spinning top inside day yesterday. I came up to test the area today. There's also, I believe, on my monthly chart, a monthly high over here that we're testing. So very high levels of this range. A lot of these pairs to the yen at the moment, very high levels from a historical range perspective. All right, so is it failing at the top here to move back down to the bottom of the range? That is the question. Candles are suggestive. Personally, for me on the pound yen, because it's so high up and it's been very strong on the fact that the pound dollar has been moving up. It'd be nice to just wait to see what the candle does today, because even though it's negative at the moment, it may be positive by the end of the day. It'd be nice to see a negative candle today. And then what I would look at is whatever the range is. Let's say we do have a negative candle today, whatever the range is for the day, drop into the 15. Range for the day at the moment is here, but that's not necessarily the range by the end of the day. Let's assume that's the range. I would simply be looking for a very high level up at the 79% level here, 188.57. That's assuming that that low doesn't get changed. If it does, you need to move the fib further down. All right, now at the moment, I know we discussed this earlier, but at the moment, it is starting to maybe want to hold below 188. So tomorrow I would look at the high level up here if it could get up there. But depending on where it finishes today, let's say we don't retest 188 today. We don't trade at 188. We just continue down now. Tomorrow, I would definitely look at 188. All right, so let's say maybe, for example, we trade down. Let's say we come down today and hit 187. There, I don't know whether the fib's going to be any useful because I don't know where the low could come. But if we did come down to 187. I would certainly look at 188 to be a resistance tomorrow. And I would also be putting the fib across the range and seeing if anything can line up. So at the moment, that's where the low of the day is. So I'll be looking up there at 188.57 approximate area. As I said before, there's this little bit of a imbalance here that maybe need to be filled. Doesn't have to fill it, but you can see there was an imbalance over here that got formed on Friday and price came up to fill that. So I know if you're already short, you don't want it to come back up, but if you're not already short, then this is how I would look at it. Be looking for, assuming that's a range for the day, by the end of the day, then I'll be looking up there. That lines up perfectly with the top of the imbalance. And then, of course, looking for this to come down. All right, that's my thoughts on the pound yen. So all the yen pairs, euro yen and pound yen, what we've gone through, all looking a bit negative. Dollar yen, if we just have a quick look at the dollar yen before we move into another pair, it's looking a little bit negative. It's come right back up to broken weekly support. Looking rather negative here. I've been discussing for quite a while, was this going to retrace back up to that level? All right, so we'll get into this a little bit later, but let's go to the Aussie yen now and have a look. Now I've got a long-term position holding on this. I'm short at 97.55, I think it is. Let me just see. Yeah, 97.55 I got short at. I got shorts in here using my 100 pip method. And I've been waiting for this to fail. And I'm not quite even sure yet, is it going to fail? But I hold it at the 79% level. It's holding at this top over here. Today, of course, it's come up to challenge this high here. And like I've been showing on the other, like the euro yen, looking at this as a drop, rally, kind of move. But of course, this could blow through there. But the Bank of Japan today didn't provide any information for this to blow up through there. And the pound yen held its high. The euro yen is negative for the day. So are we getting a topping out process on these pairs to the yen? All right, so negative day today. This could, the last 3 days I've tested this area. We could well come back. If you haven't got short yet and you're just realizing that, okay, there's massive resistance to the left over here. There's these highs to the left over here, hadn't realized. We could still come back up for another retest of this weekly high at 97.66 or that high in, I was trying to work out what day that was. Get rid of my drawing tool. Back on the 11th of January. So what was the January high tool there? So we could still come back up and retest that. But like I've been saying on the other pairs, this drop down today is maybe already done the range for the day to the 15. It's already done the high to low range. Expect some kind of retracement. And there's a big imbalance in this area. This could still come back up to my entry point once more. There's an imbalance in here that could get retested or tested. It hasn't been retested yet, but this could get filled. 79% level there overlaps with the 97.65 with 97.66 daily resistance to the left. There's that's a 4-hour high there as well. So price doesn't have to rally. If it's very negative today, it might not want to rally. It may just want to continue going down again tomorrow, or we may still continue down today. But logically, you don't want to be selling at the bottom of the day. You just have to be patient, wait for a rally. I went to bed last night, I don't know, around about here, thinking, okay, we're going down now. This is where it was at the start of the day. I was thinking, okay, maybe we're just going to continue down. It came all the way back up. So we could most definitely come all the way back up once more to the very high levels if it really wants to. So you can watch the high levels. If we continue down today and clearly break 97, we're at 97.23 at the moment. If we clearly break solidly 97, then I would look at 97 to be resistance, but we'll have to wait and see what price wants to do. Patrick, is this for any question? And Lawrence, so Lawrence, you're telling me you bought the pound at 126.11. Yep, as support, great. So I'm guessing you're trying to target the top of the range here or for a breakout, but yeah, that was good. Buying at support. Patrick. Are you asking me what would the rollover be for 3 months, 6 months? How do you work it out? I've got no idea. Well, if you hold it for 1 day, you'll know what the rate is for 1 day, and then you can just times it by 3 months, work it out for a period of 3 months. Of course, the rate can change, but I don't worry about the rollover. It's just one of those things. But if you want to work out what it's going to cost for 3 months, what's the rate for 1 day, and then times it by 90, and that's approximately going to cost you for 3 months. That's the simplest way to do it. Well, Wednesday's rate it's not really higher than the rest of the week because Wednesday calculates Wednesday, Thursday, Friday. All right. So whatever the rate is, say for Tuesday, you're going to get charged on Wednesday 3 times at the end of Wednesday, which is getting to Thursday, I believe. So if you know what 1 day is, then because in fact you get charged, what is it? They're really charging you for the weekend. It gets complicated. I don't worry about it too much, but when you get that large charge, they're charging you for 3 days. So that's the way it kind of gets calculated. All right. So if you know what the charge is, and in fact I couldn't confirm whether you get charged for 7 days because you're actually holding the position for 7 days in the week. I know there's a charge Monday, Tuesday, Wednesday. Pretty sure, is it the end of Thursday? And I'd have to double check myself. But I know you get charged for 3 days, which I'm pretty sure is maybe that's at the end of Thursday. You're getting charged for Friday, Saturday, Sunday. I'd have to go and study it. As I don't really worry when I'm doing my positions. In fact, whether I'm intraday trading or position trading, if I'm holding a position past the rollover, I really don't worry about the rollover personally. Yes, yes. If you're in a trade on, let's say the Aussie yen or the Euro yen or the pound yen, and things just going sideways and you're short, and it's going nowhere, then yes, you're accumulating rollover fees. So you need to be wary of that. But if any one of these yen pairs that you may be contemplating selling breaks down heavily, then yes, you're paying rollover, but you're more than making up for the profit on the position if you're getting a very strong break. So you just have to watch that you're not in a position for 2 weeks and the thing hasn't gone anywhere, because then, and you're maybe fighting the trend a bit, then you do end up paying, rollover. But if you want to work it out, just look at whatever it cost you on Monday, and then times it by 90 days, and that'll tell you what a month, 3 months worth is. All right. Aussie dollar. Now, the Aussie dollar last week pretty much topped out at 67, went down to about 65. This week, we're kind of maybe trying to top out at 66, or it's very suggestive at the moment. So what is happening? This is my day chart. This is the major range though. Come up, failed a little bit above the 79% level. I'm anticipating that we are moving this kind of frame in mind. That is the move down, long-term move down on the monthly chart, be it this is the weekly chart. And then we've had been corrective. And we're coming down here maybe. And can we follow through? At the moment, this is the weekly chart, but we're getting a bit of a bounce from weekly support down here. There is the question that long term we could still move up. However, I'm looking at this as maybe a final top to these tops to move down. So that being said, day trend here is down. Last major area of support broken was in through here at 66.47. It would be nice if we could get up to there. That's the level that I'm watching to sell down from if we can get up there. But at the moment, just a 4-hour chart, range of last week, we maybe haven't quite got to halfway yet. Almost. Last Thursday, I was discussing 66.47 here. 62 level of the major range at 66.58. I'm just watching to see if we can come up to this level. At the moment, it would seem that 66 is holding the market. If I drop to the 15-minute chart, you can see my figure indicator here. Got above it yesterday. Got above it again today. In fact, Friday, we couldn't get above. We got above it Monday. We've been above it again today, but couldn't take out Monday's high. So to me, any further move up would be probably at the moment a watch of staying at 66 to trade down. All right, so I would say over the next 24 hours, if we get any more movement back up, you really want to watch 66, because any more weakness at 66, you want to try and short it as close to 66 on a setup. Last week, we pretty much failed at 67. So this week, then we rallied back up from 65, approximate area, and 66 is becoming resistance. So it's not out of the question at the moment that we couldn't come back up and retest 66 and then fail tomorrow or fail further again today at 66. All right, that's most definitely the area to watch. And if you're looking for a long-term positional play at the moment on the Aussie, selling at 66, stop at 67. This is approximately 63, just underneath 63 down here. If we come back down to test the last year's low, at the moment there's more than 300 pips to get there. So if you could use a 100 pip stop to get in at 66, stop at 67, or you get a tight entry at 66 and then you're able to get to break it even and not get retested and stopped out, then maybe we are moving down at the moment this week from 66 long term down towards 63. We do need to get through the 65 area in here. So 65.11 to 65.22 is support at the moment. So if this comes back down to this area and holds this week as well, it's only it's less than 100, we're in about 100 pip range at the moment for the last 3 or 4 days. If we hold one small around the 65 area, then that could well be support for a move back up. All right, it's not given that we're going to break down towards 63, even though that's maybe suggestive of the bigger pattern. 65 could definitely hold for maybe a move back up to 68 over the next month. All right, 68 is a very good selling level up here. So, if we see continued weakness around 66, anticipate we'll maybe move back down to 65 and can 65 break. So I'll just be watching to see now if we can get some kind of rally back up there. This sell-off down here today, which is a lower top to yesterday, at some point, this is probably going to have a bounce. So you can drag a fib down from that high. That's the current low, so we'll just leave it there. 62 levels at 66.01. There's a minor high here. There's Friday's high over here. I just want to confirm that is Friday's high. Yes, it is. All right, so there's enough there at the moment starting to form around 66 to start to be a resistance area for sure that you can look to trade around. All right, New Zealand yen. I don't want to say I told you so, but Thursday, last week, Thursday, that was where I said look to sell. I think I was discussing this larger range on Tuesday last week. This to come back up. And then on Thursday, I was looking at this range. I don't think price was right down there when I drew my fib, but in any event, I was saying, look at the 79% level of that range. So that would be this area here. Now, if you were selling at the 79% here with a stop just above there, you may have got stopped out here or not, depending where you put your stop. If you're looking to sell at the bigger 79% level, maybe of this range here, putting your stop above there, then that would be ideal. So you can see at the moment, a lot of these yen pairs are working around the 79% areas of the ranges. And this is, this now it's fading up here. You can see today that the area of resistance that we've been bobbing above and back below, just tidy these off, is becoming resistance at the moment. So this area over here, this area through here, the high of today is being met as resistance from this area here. And we've put in a lower top to a lower bottom here. So I'd, like I've been saying on the other yen pairs, is just monitor the range of today, tomorrow. Currently, I'll do it on the 15-minute chart. Currently, it's done the range for the day in terms of the average range. Again, look to the 79% level. If it can get there, there's an imbalance in here that needs potentially to be filled. 79% level at the moment is at 90.27. Of course, it doesn't have to get up there. Or, of course, it could go a little bit higher. We do tomorrow, as I'm talking about the New Zealand yen pairs, we do have in the morning at 7:45 my time, CPI-QQ, expecting that to fall. That's negative, coming in, that's negative for the New Zealand pairs, because that means potentially getting closer and closer to cutting their interest rates. If I'm reading this right, if that comes in at 0.5% for QQ, then does that mean there's 4 quarters? So that means that inflation potentially is 2%. If I'm reading that right, I don't think that 5% is the annual inflation. That's just the quarterly inflation. So if there's 4 quarters, that means that inflation's at 2%, which is usually the target rate for most of the major economies, like the US. So that would be very much, getting down to the lower threshold, I'm sure, for the New Zealand central bank to think about at some point, can we start to ease policy? So that's why the New Zealand is one of the weakest to the US dollar at the moment. So I'd be interested to see what that comes in at. But if that comes in a lot closer to 1.8, then I'm sure we'll get a spike up. And so if we do, back to the New Zealand yen, we can certainly come back up to test 90.42, depending on what that news does. And there is a bigger range that's forming here now. So depending on what the news does, you could be looking 79% level here is at 90.57. See a spike up to there, potentially, depending on what the news does. All right. All right, New Zealand dollar. Unable to get much of a bounce at the moment. It's just managing to hold at last month's low just. It's not by any stretch at the moment having any friendly bounce. I don't want to be selling into, if you're not already sure, it's difficult because you've got support here. More support. So support's at 60.55. $60.86, $60.83, and we're at $60.90. So it would be nice to get a bounce. So you could sell up from support. So, sell up away from support, trade down. And you can see what's happening today. We've been trading back up inside yesterday's range. So we've probably had a 62% retracement of yesterday's range up here. So it's just not in the perfect area at the moment to sell, because you're selling into support. Now, it would be great to monitor the range of last week. There's the higher last week. Just drag it down to the new low of the week and see where price can come up within that range. This could come back up and trade within the range of last week, even though we put a new low in. So I would monitor that range and see what happens. Lots of 4-hour lows here that are broken. There's a bit of an imbalance in here. So whether you're monitoring the weekly range or you're actually using the range from the day chart. So day chart, that high point, that's probably a better point to use to that point at the moment, rather than just monitoring last week's range, because then that 79% level comes in pretty much where this imbalance is as well. So I'd be monitoring both ranges, this range, last week's range to the low, and that range. Either range could be dictating, but from the day chart, that's the most significant high point to low at the moment. So that's what it'll look in the face of the news coming out tomorrow. It's only 100 pips away to 62% level of that range. All right. And depending on what the news brings out, we can get some volatility, certainly get up to there tomorrow for sure. But this is looking rather weak at the moment. I think the chances of getting a rally are probably remote, but that would be the play to do. If not, you're looking at this 60.86 level to clearly break and become a resistance. You've got last month's low here at 60.83 as well. You want to see a clear break below and then this to rally back up during the week to 60.86 to be resistance. But at the moment, we don't have that play. And this is strong support. So it is not out of the stretch for this to come back up the range and then look for an opportunity to sell. Right, dollar Canadian. That's how I drawn on Thursday, came down to the level I was discussing. Now, let's go to the day chart. We'll go to the monthly chart and just show this is looking very similar to the dollar index. Inverse head and shoulder pattern may be forming here. Having a 4-week rally, 4.5-week rally. And the fib I had drawn was across the day chart range to look to buy a dip. That's already occurred. So if you haven't engaged at the 62 level or close to, then you need to drop down to the 4-hour chart. And start monitoring the 4-hour range here. So you could monitor this small range for a dip. Just the 15. This might not go too far. Of course, we've got the inflation figures coming out. Sorry, the interest rate figures coming out early Thursday morning. So the market, Canadian traders will be definitely looking at this to see what's going on. So this may not do too much, but it's in an uptrend. So just look for the dips within the uptrend. So we've had a dip down on the day chart swing. 4-hour range at the moment. If it came down, look to the 62 to 79% area. 134.41 to 134.29 in this area. Can we come down to this area and hold for then a move up for the rest of the day? Might not be able to get down there, but you always want to be looking to buy the dip. And, you know, the dip, if if you're using fibs for dips, you're looking to the 62.79% area for a dip, and that would be the, you know, the highest probability area to be able to construct something for a best risk reward for a move up. All right, dollar franc, continue its uptrend. Never came back to retest 85.52 once it broke. So just the monthly chart, we've had a false break of monthly support here now. We're up to test this area of monthly support that we've broken at 86.99. So it's just not in a great spot. And the monthly and weekly trends remain down. The day trend is up. You can see for the last 3 days, we've been holding 86.99. So, yeah, can this day chart trend continue up against the monthly and weekly trends, which are down? It's not in a great position to be a buyer at the moment because you're buying straight into monthly resistance. So you would need to look for, you know, if you think it's going to continue up long term, you need to look for some form of a dip, which we have dipped today, but structure on the 4-hour chart is down at the moment. So, you know, I'd like to see a dip. In a perfect world, if I've got plenty of time to look for a trade, still the same area I was discussing last week, 85.52 is the area of monthly support that we false broke. And at the moment, we're hitting monthly resistance up here. So we could actually be failing at monthly resistance to trade back down to support. This actual 4-hour trend is down. So I don't know if I want to trade down from this area because the day trend is up at the moment. I would much prefer to just be looking down at 85.52 if that could be traded at. But that's 130 pips away at the moment. Watch and wait on this pair at the moment. Back to day chart. And the day chart range, 62 level overlaps perfectly with your monthly support. So that's the buy area for a continued move up if that's what we're seeing. All right, we just have to be patient. We won't want to buy anywhere near that monthly resistance at the moment because that's holding. So that's the safest place to look for your buy opportunity if you want to, if you're a buyer. Of course, if you're much more on the short side and you think this is the final top before the next major decline in the dollar franc, then on the 4-hour chart, this actually has structured into a downtrend. You could look to the 4-hour downtrend range. This last move up has just come back up to the 15-minute chart. Just a bit short of the 79% level. You could still watch up here to see whether it gets tested, but you're breaking to the 15-minute chart if we're looking for a short. We have just come up to fill this imbalance, holding at central pivot. You know, if this starts to close below the 62 level, then, you know, let's say we get a candle coming down, it closes like so. You know, you could be looking for a short on the close, just putting a stop above there. That'd be a nice tight entry for a decline. Looking at the 4-hour structure at the moment is down. Of course, I'm looking on the day chart as the trend is up to buy a dip potentially. Of course, price has to get down to the dip level. So it depends on there's always two sides of the market. What side of the market are you looking at on this pair? So at the moment, I would say the most immediate trend is down intraday. However, the day trend is up. So it all depends. What is your rules to engage in methodology? Do you want to go against the day trend? If you do, that's fine. Trend on the 4-hour chart's down at the moment, and we've just had a rally there. All right, let's get into dollar yen. Now, potentially on the monthly chart, yen's topical today because we've had the Bodge policy statement. We've come back up to test 148.80, which is a weekly area of broken resistance, but this is the monthly chart at the moment. Double top, is it? We've just had a month up. We've retraced all of December's losses. Back to broken weekly support. 79% retracement. Almost a bit short support. Broken support held that area. Couldn't quite get there. You know, we can still move above there and go up and test the all-time high, of course, or not the all-time high, but the all-time high of last year and the year before, depending on the US dollar news coming out. So it's not a given that we are topping out here finally. But if we have a week, if we finish negative for this week, then potentially, it does add strength to the conversation. All right, and we're having an outside day today. So this is just looking a bit more like a reversal. Really the same commentary. I think this has maybe got dropped, rallied. Are we getting ready for the next major drop? I did notice when the Bodge news came out today that potentially we formed some form of like a 4-hour head and shoulder pattern here. So we are starting to break down in terms of our structure here. At the moment, like I've been saying on the other yen pairs, is to look for a rally. So that's the range for today. Drop to the 15. Assuming that's the bottom for the day. This is just coming up to fill the imbalance that it formed down through here. 62 level and the 148 level is in there, and the central pivot point. That's probably where the sellers are at the moment. That will be an area to watch for that to turn around intraday at the moment. Yes, of course, there's a high level there at the 79% level. Lots of things going on just there, though. Imbalance, central pivot, the figure, 62 level of the range formed for today. All right. If it gets a bit higher, they got the 79% level at 148.20 and last month's high up here at 148.34. All very good levels to look for a reversal back down from. All right, just quickly finish off the gold. Looks like it's had, these are the weekly or monthly areas of support, weekly chart. Let me just get rid of that fib. Being held at weekly supports, held at weekly monthly resistance up here at the moment. It has put in a lower top on the weekly chart. On the daily charts, we are at lower top, lower bottom, potentially putting in another lower top here. So this looks like it's trying to grind down, maybe trying to grind down below weekly support here at the moment. It's not great. There's not that much room from where price is now to support. So 2026, 2009 is support. So, you have to know when to fight your battles. That's the daily high to low. So 62% retracement. You could watch during the day for another test of the 62 level at 2039. Does that hold? But not that much space